Hey everybody, JJ here, Bolt to the Bust. It is September 22nd, Tuesday, 2020. Well, it looks like to me, and this is just my analysis, that we've got a nightmare economic crash scenario being staged right now. Now, to start off here with the number that's pretty revealing, we've got U.S. home sales have now jumped to a 14-year high. So these are the highest home sales that we've seen since a couple years prior to the housing bubble going bust in 2006. Well, the housing bubble started unraveling in late 2008, but the peak in sales we saw in 2006, a couple years before the bust. And we've got just a mass hysteria of home buyers out there purchasing homes. And we've talked about it here, but just to recap, many people leaving the cities, ultra low mortgage rates, new all-time lows being hit every week it seems like. Lending standards that had been restricted at the beginning of the lockdowns in March, April, May, well, those have now been loosened again. We've talked about that and covered that here a few times on the channel. But this is very dangerous. We've never seen a more distorted market. The housing market, the stock market, the prices in general are just way distorted. We've never seen this level of intervention. And it's not just the stimulus checks, it's the moratoriums, the eviction freezes, the assistance on all the different types of debt, from student loans to credit cards to mortgages to utility bills, you name it. This economy right now has never been more distorted. It's never been more propped up. The junkie has never been this high. The drunk has never been this intoxicated. Now, I want to go back to the home ownership rate again. This is for all of the United States. And if you look to the far right here, you see the parabolic rise in home ownership. That shows the fierce rush that we had of people, especially the people leaving the cities because of the pandemic, because of the new work at home opportunities. Also, many people escaping the violence that we see in some of the cities and the destruction. But when you see home ownership rise, that doesn't just mean that more people are buying homes. It also means that people that own second homes and investment properties are selling. So when a landlord sells a home to a buyer who uses that home as their main property, that makes the home ownership rate increase. So this rise also tells us that investors and people that own second and third homes are selling. So think about it, right? If a person buys a home and the seller had that home as their primary residence, the home ownership doesn't change. It went from being a owner-occupied home to an owner-occupied home. The home ownership rate stays level. Now, an investor sells, or a person with a second or third home or income property, when they sell, it goes from being a rental, a tenant-occupied home, to an owner-occupied home. So that's what causes the home ownership rate to increase. So this tells us, this chart right here tells us that there's a huge surge in investors and people selling their homes and the home ownership rate increasing. Now, what's going to happen when prices are allowed to correct and you have all these new homeowners, and I should say quote homeowners because many of these people took out loans, and according to this chart they'll call them homeowners, but are they going to be homeowners when home prices drop and when we finally get back to real price discovery, right? Because eventually there's going to be a correction, unless we see something that comes out of left field that hardly anyone realizes is coming. That would be something like a massive debt forgiveness or debt jubilee. Something that most people feel that's never ever going to happen. All right, next, let's talk about the restaurant fallout, and it's likely to get worse. A recent report here out of New York Post, almost 90% of New York City bars and restaurants couldn't pay rent in August. And we talked about it just a few reports ago that Manhattan has plummeting condo prices. Now, where are all of these workers that worked at these bars and restaurants in New York? Where are they going to find new work? When we look at the Yelp survey, now 60% of businesses on Yelp are now out of business, closed permanently. So all of these waiters, these service workers, they're going to have to find new jobs or get on some sort of unemployment or just be unemployed. And it's going to be very difficult. A lot of these service workers did not count their tips into their annual income. and didn't claim it on taxes. So that means they're going to get a much lower payout if they do qualify for unemployment. Right? So it's going to be an absolute nightmare for a lot of these people. And it's not just New York City restaurants. A lot of restaurants are not going to survive this downturn. And a recent Yahoo article gives us a nice chart here of a lot of the more popular nationwide restaurants. Some of them are regional, but a lot of the more well-known restaurants filing for bankruptcy. Now, most of them are Chapter 11, and that means they're reorganizing their debt. You may not see all the locations closed. You may see certain ones still stay open through the Chapter 11 reorganization. But we see here First Food. They own Bravo and Rio chains. Bamboo, they also own Quick Fish, another Chapter 11. NPC, that's Pizza Hut and Wendy's. California Pizza Kitchen. Soup Plantation, that one actually is a Chapter 7, so you will not see any of those locations open unless some investor comes and brings them back from the dead. Chuck E. Cheese, Chapter 11. Fig and Olive, Sizzler Steakhouses. Now, still on the topic of restaurants, here in San Diego, and this is out of NBCSanDiego.com, some restaurant owners are vowing to remain open if the county moves to restrict these businesses. So a lot of these restaurants put tens of thousands of dollars into improvements, expanding the patio area so people can eat outdoors and remain social distance. And many of them are saying that they cannot survive another shutdown or another lockdown. So they're going to stay open, and they're just going to face the penalties because they say if they don't stay open, they're going to go out of business anyway. So many of these businesses are just saying, hey, we're going to stay open. We're going to resist the orders to reclose because we're not going to survive anyway. So we might as well just stay open and take a chance on getting a citation or a penalty, right? So it's a make it or break it situation where now we have the government actually closing down businesses that are barely making it, barely getting by. And California is one of the worst states. The other state that's not so great is New York, showing the high restrictions and the panic. And these states are going to be very difficult to live in. Of course, I'm here in California and I'm saying this, but they're going to have to raise taxes on the working people to try to make up for all the lost revenue from all the businesses that the government is driving out of business. And we see a lot of rich people fleeing both California and New York. Of course, the businesses, tax revenue plummeting. And it could be an absolute nightmare to stay in one of these states. I'm looking to get out. As soon as this real estate market corrects, I'll be trying to get out. But think about, for every nationwide restaurant that closes, there's likely thousands of mom and pop small businesses that are getting shut down. And this is just the beginning, folks. When the system is allowed to attempt to operate on its own without the stimulus, without the propping up, we could see an absolute nightmare, economic collapse. We don't know when, but we do know something big is coming. Please let me know what you think down in the comments. Thanks for watching this report, everybody. Bolt to the bust. Peace.